All right, traders, Damien here again. I guess we're going to talk about how to start incorporating structure analysis into high probability trading opportunities. I didn't want to get into trading setups this early. I wanted to get past order flow. They would help you understand what setups are likely to not work out and which ones have to be managed more aggressively. I will try to turn off that part of my brain to not use the order flow process to identify these setups and just use basic, uh, strictly the expectation. It looks like we have a butterfly pattern here, which we're not going to discuss now. Um, I haven't ratio validated. I'm not going to. It just happened to catch my eye now, so thought I'd mention it. But we're on the Dow Futures 15-minute chart. This is a chart we've been using, and I want to say right off the top that I'm very pleased with the work that you all have been putting in and using structure analysis. I also am very pleased to see that you're using short-term structure analysis with your longer term to help you um, understand these expectations in your uh, interacting both to help you formulate a better expectation. It makes me very pleased to see that, and it looks like some things are really clicking in a very nice way for most of y'all, and that you're starting to process this, with a deeper mindset. Really happy to see that, and I particularly like the interaction. After this video, I'm going to go back and catch up on the thread since I haven't been able to do that. I've been very busy today, so I apologize for um, not being more proactive with the thread, but sometimes life happens. Anyway, let's get into this. Let's not waste any more time. I'm going to scroll back here into a random place. Let's go back here somewhere and hit the scale button here, and we see that the market is generally moving sideways, and we've produced a weak new structure low, lower high, retested these lows. Market is coming up. Will be interesting to see what the market produces here. Right now, we don't have a viable trading opportunity. We do have to recognize that in this particular area, the bears have been able to overpower the bulls, and we have a nice area of supply up here. Okay, that may push the market lower. Our expectation right now would not be for a new structure high, even though that could very well happen. But the last thing that we achieved was a new structure low in the short term and a new structure low in the longer term. Okay, and then we produce a lower high. So our current expectations for a new structure low, we tried to achieve that. There was a lot of rejection off of this level. Okay, so right now we do not have a viable trading opportunity, but um, our bias is to look for an opportunity to sell this market. So we're going to let the market push up here, and we see that we have our first hint of where the bears are trying to come in. This is where I would be aggressive and take something here, as I retested the lows off of an expectation of a new structure low. I do see good volume here, although I do see pretty good volume in taking price higher. I do see rejection here. I do see the intent to come down here. I do see some rejection here, and then I see a candle that would just never try to trade above its open. Now this is above the scope that we're in right now. We are going to get there. We are going to talk about bar by bar. But right now, I just want to look at what is our expectation here. Our expectation was for price to come into this general area and for a new structure low to be formed. We could still fail here, but our stops would have to be above this area. Um, Quite a bit of risk on a 15-minute chart, but our expectations for a new structure low. So we're going to proceed here and see that price came down to this level where price found significant support in previous price action. Here, this whole area, we're in a, looks like we're in some sort of range. But at this point, we can remove our risk, lock in 5 to 10 points, 72, 62. It's fine. 65. Let's give this trade some room. And our expectations for a new structure low. Let's see if price achieves that. And we got taken out for a very small profit. Now, our expectation could still be a new structure low, and we could still achieve that. We're going to look at this, and I'm still looking for opportunities to get short, as I'm still seeing more strength on the bears than I am seeing on the bulls. Okay, so the first trade was a small winner. We took 71 to 65, almost 10 points. To be honest with you, we took 6 points, which is fine. At least we reduced the risk and we got to a break even. Now, I'm not going to cover particular trade rules for this, because my trading style involves order flow and other things that I am going to be teaching you. But I'm sticking strictly to the expectation and how to come up with a trading opportunity that highlights structure analysis without incorporating the other elements that you're going to be learning in the next few weeks. So let's just keep moving along here, and we see another opportunity where the bears came in. I would look for opportunity to enter here. We tested lows. We see the weakness coming up. We see a little more strength here, but this is an area that's consistent with all of the structure, complex area. Our expectation is still for a new structure low, so we would not be in a position to remove risk yet. This is a trade that at this point I would be a little worried about. Expectation still remains ever so weakening, as we are still not producing new structure lows. We're still not in a position to remove risk, and here we go. Okay, now we tested the lows. We get to a break even spot, plus 5, 10, whatever you guys decide in your trade management. We did achieve that new structure low. We are looking for more, and another break even. That's the way the cookie crumbles sometimes. But let's talk about what we had achieved and how you could incorporate a set of trade management rules that would have helped you been more aggressive and take, excuse me, I gotta answer this, and give me a sec. Apologize about that. So, we're talking, 30 points here, 40 points here. That's 70 points in 2 trades that all went in favor, gave you an opportunity to reduce risk, produced the expectation. Now, this expectation, I like to get to a break-even point at a test of structure in case structure holds and price comes against me. That's just me. But I use other ways to manage my trade that would have probably kept me in this trade and given it more room. We'll talk about that as we get deeper into this training. I just wanted to let y'all see how to incorporate some possible trading opportunities around structure analysis. All of these, in my mind, are winning trades, even though we took very little from them because of our trade management. Trade management, as mechanical as you may have it, is always has a huge emotional component to it that you will never completely separate yourself from. But priority number 1 should be reducing risk and getting to a risk-free trade. Even if that trade doesn't work out, ultimately, that is fine. You also don't want a trade to be 70, 80 points in favor, and then you end up with a break-even trade. You can trail on short-term structure. You can do a lot of different things to manage your trade. Just try to keep it as mechanical as possible. Getting back to what we're here to do, we see the price achieve the expectation for a new structure low. We expect a deep correction, so we'll continue moving price. And now we have another signal here that we can possibly take short for a new structure low. Stop would have to be above this area. Expectation is for a new structure low. Come on, price. Here we go. Very nice. And now this is you know, again, depending on what your profit goals are, we're talking, and what your particular expectations are in this particular area. Let's say that you strictly take profits on a one-to-one basis. See that the bulls came up here pretty aggressively. You could choose to get to this area. If you wanted to continue on longer, you could just take profit at the completion of the one-to-one. However you choose to manage it, doesn't really matter. Here you have another winner. So here we have another expectation and how we could have capitalized on that. So now we want to, you know, again, this is a personal choice. I use other elements to manage my trade. From your point of view, you can take profit at the one-to-one completion, wait for a correction, look for re-entry. Okay, this is an area that you could look across. There's lots of structure. Another opportunity to get short here. Another expectation of a new structure low. This is one of those that you may want to think about twice. As you can see, the bulls are pretty pissed here, but there's still a lot of volume here. At the very least, you should be able to get to a position of break even. Where would your stop be? See, that's a tough one. It's just getting a little bit more complicated, but you want to be definitely above this area here, so give yourself a little bit of room. So let's just say worst case scenario, you ended up with a break even here, you know, +5. Give yourself at least 5 points. You know, here too, and here you took 51. Here you're short again. Weakness coming down, not good. But what are your expectations for a new structure low, right? You got a higher low, price broke structure to the upside, not good. But right now you're still barely hanging in there. Now let's look at this. You know, this is a complex correction to the upside. One of the things that you want to possibly do here is understand where a one-to-one against you would be. This is a clear high, this is a clear low. We're correcting between these 2 points. Got in trouble there, but you know, price is still cooperating. Our expectation is still a longer term new structure low. We broke short-term structure to the downside. We see a massive angry bulls here. We didn't really get down here to retest these lows, so I'm not sure particularly how you would have handled this situation, whether you would have gone to a break even or not. I don't think I would have, and I would have been stopped out here, which is fine. So in this particular situation, we had an expectation failure pretty much. And now we have price broken 2 levels of structure to the upside. Price has made a new structure high. So we want to see is a pullback for an opportunity to get long again. This is where I would get long. Right here, I'm not expecting a deep correction. We pulled back into this area of structure. Our expectation is now what? A new structure high. So we would have obviously, sorry about that. We would have been below this area here of structure. We would have been at a break even +5. We've made a new structure high. We obviously, it would be a little unreasonable to expect a 1-to-1 from this huge move. It could happen. I think at the very least you want to target a 127 extension as an initial profit target up here. But we have reduced risk from our trade. Looks like we're going to get stopped out here, which is okay. Still alive. Doesn't look good. Okay, and we would have gotten stopped out here for a small profit. So again, you still have to work on trade management. I do not want to get into trade management yet. I want to just y'all to see the opportunities here, okay, and the probabilities. This trade gave a maximum of possible 53 points. You know, it'd be hard, almost impossible for me to walk out of this with a break-even trade being up 53 points. But you know, this is a time frame that has profit targets that could be quite large, and you have to balance your trade management with the overall expectation. The expectation here is nothing more than a new structure high. We're not using order flow to help us understand what kind of new structure high we should get, what kind of pullback we should get, which is basically going off of, you know, expecting a higher low, letting price come back to an area of structure, having good price reaction to that area, and going in with the expectation of that new structure high or new structure low. We're not looking for any turning points. We're not looking for any reversals. We're just following the price, the structure analysis. Okay, we'll do a couple of more of these, and then we'll call it short. We'll cut this video short so that we can so I can get back and answer the post and let y'all see the power here of just trading expectations, how potentially profitable you could be, and at the very least it should help you filter out in your particular systems that you're using now that trading against expectations is just not a good idea. Okay, every trade here, even possibly this one, depending on what your rules say, probably would have had you at a break even. So that's a testament that this is an extremely powerful way. Each one of these trades, this one we talked about giving possible 30 points. This one was about 50 points. This one was another 50 points. This one was you know, we took the loss on this one just for sake of example, but this one was another 30 points. This one went up, you know, possibly 53 points. So huge opportunities here. But what's happening here? We're between this high and this low. We're correcting here pretty deep. Tested the lows, did not make a new structure low, but we are probably going to make a new structure low here. We have massive rejection. This is a trade that I would take aggressively. Don't particularly like the risk involved here. It would have to be above this point, but I am seeing, and I shouldn't be seeing it because I haven't taught you this, but this is a trade that on an expectation failure, we're retesting these lows. This is huge. I would definitely move and lock in significant amount of profit here, and there I would have been taken out. Again, I'm not getting too much into trade management because I don't want to get too far ahead of our process here. And this is 73 points. So I wanted to keep this video short, but I want you to see the gigantic advantage that you have in finding a trading style around this very simple type of analysis, and how your trades at the very least provide you a very high probability of making a tremendous return with little risk. A lot of these will break even trades, but depending on how aggressive your trade management style is, and how you would use short-term order flow to help you lock in profit along the way will have you with a very profitable, very nice and easy system that could yield you some handsome returns. Give me a second here. I hear my dog chewing something up. Hold on. So let's just say in this section alone, this is all the trades we took, and we took every single expectation trade moving forward, and took those entries. Okay, and here we had 7 break even, and we all understand already. We've gone through how you could have captured so much more, but that's okay. You need to find your own trade management style. Is going to help you capture much of these as possible. It could be a fixed profit target. It could be a 1-to-1 expectation. Whatever it is, a ratio attainment of a 127 or a 138 extension, whatever it is, you just need to be consistent to that approach and have a favorable risk-reward profile that's at least 1-to-1 or better, preferably 2-to-1 or better, and you're going to make a tremendous amount of money here. But let's just say we got 7 here, we had another 5 there, we had 51 here, we had minus 26, that's 37, plus 7, plus 73. We had 117 points in really stress-free structure analysis trading. So I wanted you to see how to incorporate this into a trading methodology that you could use with the skills that you already have right now. And this one might have been a little bit advanced. I cheated here a little bit, used some order flow, used some short-term expectations failure, saw the huge weakness on the bulls not being able to achieve at the very least a retest of this high. Saw the bears come in, make a new structure low, increase in strength from here to here, more projection, huge rejection. I mean, it was like a sell me, bing bing bing, bells and whistles going off here. But that's okay. I mean, I wouldn't have expected you to pick up on this, but I wanted to see how easy trading can be, and how it doesn't take an overly complicated process to make all the money that you need and want to make. It just takes a little bit of common sense, a little bit of understanding what expectations are, a little bit of understanding as to where price should come back to, areas of structure, wait for the opposing force to come in line with the expectation, and take the trade, and you're going to be okay. Practice this a little bit, start thinking along these lines, because next week we're going to get into order flow. It's going to make this process all that much more easier. It's going to help you understand, based on an expectation of a deep correction or a shallow one, what is a better entry area, so you don't enter and have to endure a whole lot of pain if price goes against you. As you can see here, I didn't use any of those skills, with the exception of this entry, but really didn't go through any pain, and this losing trade might have even been a break-even trade, depending on how you would handle that. Be smart, be smarter than the people that you're trading against. The price tells you, the price tells you exactly where the buyers came in, where the sellers came in, where the buyers came in, where the buyers are likely to come in, where the buyers are likely to come in again. Look for those areas to reduce risk, lock in profit, or take profit if you're satisfied with where your trade's at. Don't become a victim. Don't let winners turn into losers. Protect your capital. A bunch of break-evens and you lock in 5 or 10 points, they add up. And these little ones alone, you had 12 here plus 7, that's 19. That's 20 a day keeps work away with the proper being properly funded and taking consistent profits. And that's all I have. I wanted you to see that. I didn't want to get too in depth. I didn't want you guys to lose focus and start drifting into other areas, and see the value in just structure analysis alone and how simple trading can be. It is not a difficult thing. We make it difficult, but trading is not hard at all. You have an expectation. Those expectations play out. the vast majority of the times, why not find yourself opportunities to get into, engage the market, you know, in line with those expectations, and you know, have tons of reasons, which I don't want you to take any trades at this point against an expectation. You know, they play out so much that it's really not worth it unless bing, 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 something like this pops up. Okay, but we'll get to that. You know, I wanna make sure that we learn to walk before we run. It's important so we don't fall flat on our faces. I'm talking too much, and I think you got the idea. I think you got the point I wanted to make, and that's all I have for now. Keep practicing your expectations. Start thinking in lines of, you know, entries. Those of you that are trading real capital, please use small position sizes for now, so that you build a comfort level with entering and with trade management. Have some rules. It's the only way to be consistent in this business. I know you're not always going to follow them. I don't always follow them. Trade management has a huge emotional component to it that's hard to sidestep, but if you keep your process as mechanical as possible, you're going to be as consistent as possible. Okay? That's all. I hope this lesson had value, and we're going to get into order flow soon. I just want to see a little more of that interaction, and you guys using some of that shorter term expectation to help you confirm the longer term expectation. You're all doing great. I think you're leaps and bounds from where you were a week ago. I think now you're starting to see a lot of that randomness go away, a lot of the mystery behind where price is going disappear, and at the very least, I hope you see how the indicators can't and won't help you understand where the market is going, and that process is as clear as day when you have the market telling you what it wants to do. Okay? Again, I'm talking too much and I need to stop, so we'll talk soon.